There are three things that investors and traders in lithium on the ASX need to know right now. Number one, the best performers are winning two races at the same time. The spot price is showing a looming supply deficit that is coming in 2026, just as we're seeing weaponisation of that supply chain. And then number three, where the assets are domiciled matters. This is creating what's called a halo effect. We're going to do this by looking at the top 6 lithium companies on the ASX right now, and we'll do it as quickly as possible because members have given us the feedback. Thank you for the support and the feedback. They want this as quickly as possible. And then we go into detail into that podcast that is for members only, talking about which companies, where their assets are, how they fit into the theme, and a bit more detail, like we did with Platinum on Monday and Rare Earth Elements previously. Thank you for that support. If you want to kick into gear and get that as well, click join, and you'll also get all those members reports where you get the top 30 momentum companies, you get momentum profile and signal strength, which tell us when to lean into momentum trading, and that's right now. So let's look at these top 6 companies. We've got this on screen and we've got the performances, weekly, monthly, quarterly, yearly returns. You can read that chart. That's pretty easy, that table. What we'll see in the cross section is something else beyond the top 6 that we're seeing right here. The best performers, the highest returns, they're explorers with recent discoveries. Think of BM8, FRS, and CC9. Second, strong returns, we're seeing resource stage developers, CRR, ZNC. And then producers with operational challenges. These are companies that we generally think of when we're going for a lithium investment on the ASX. Your PLS, your IGO, Liontown Resources. And then mineral resources, yes, they have an iron in many fires, but we do like to link them with lithium because they ran when it ran hard before. So let's move into the best performers. We're going to see them winning 2 races. So KGD, Kula Gold, as the name suggests, they've got a tailwind of gold, and they've got recent updates on the ASX about their gold. You can see these massive jumps, episodic pivots, viable gap ups, huge volume, and they're soaring. But they're running with tailwinds of not only the lithium market, but the gold market. And they're not alone, because another strong performer in that space, we've got ZNC. So Zenith Minerals, similar sort of thing. They've got iron in 2 fires, and they've got the tailwinds of 2 thematics or 2 commodities roaring at the same time. Now, this is where the weaponisation comes in. The weaponisation and the supply chain deficit. So what we've got here is the spot price has flicked up, and we're seeing that movement in lithium. Lithium doesn't trade like gold. Look at the gold chart in a second. But we do see the futures climbing. This is critical. We've covered this many times before when trading commodities on the ASX. The best times in our experience is when we're seeing not only the spot price run, but we're also seeing the futures. What do I mean by that? Well, in TradingView, it's super easy. On the right-hand side, it's this blue line here. We're seeing the forward prices kick up as well. That matters because what that means is that there's a longer term benefit. It's not just a short-term reaction, a flash in the pan. If you're an institutional investor, you need to be deploying capital on a 3-5 year horizon, particularly if you've got a large amount of capital to deploy. You need to be running the numbers and projecting out where the profits can come from in the companies that you're investing in. Think of the companies on the ASX that are in that original table. Now, if they're to get the maximum dollar benefit and utilize their analysis and their insight into the industry, they've got to have the time to reap those rewards. If they don't see the futures pricing up, then they're not going to deploy the capital. This matters to us as momentum traders because these are the ones that we sell into. We're going to take a 10, 15, 20, 50% rise, something like that, out of the share price and sell into these institutional investors that are going to hold it longer term. Then we'll move on to the next trade. So we want their participation. They are showing up in the lithium market, and we can see that here with these futures coming up, and we'll have a look at an ETF in a second. The companies that are still winning, so that first point, winning 2 races, this is the gold, the futures price, the spot price for gold, I should say. And then we've got the futures price pointing up as well. So these 2 tailwinds are helping 2 of the best performers in that lithium space right now. And primarily you could argue that actually the gold price is driving them. But they do have lithium as well, and they do have assets that can be sold or spun off like we have seen before. Now, to the deployment of capital and large capital, this is where we see huge volume spikes, and we see institutional investors show up in the footprint of the volume profile of the charts that we're trading, and the setups that we like for momentum traders. What we see here is just one of many global lithium ETFs. You can pick one. This is just one. There are many. The reason this is important is it shows that the lithium companies are soaring. The basket of lithium companies is soaring all the way up and down or up or downstream in the lithium supply, the lithium industry. That tells us there's deployment of capital, and that's institutional investment. This is sort of another vote of support. If we see the spot price, the futures, and the ETFs all moving up, this tells us it's a good thematic with a lot of tailwind behind it, and that's when we'll lean in on the investment side. you want more detail on that, have a look at the Friday video and the 30-30 list that we send out to members. Now, this weaponisation of supply chain, we've got the gold futures we want to move on, and we've got the ETF, yes, okay. So BM8 is probably one of the best ones in that side of things. Bear with me, they've got a lot of commodities, and if you look in there, you'll see that they're across a fair few. But this is critical, and it leads us into that third point with the halo effect. Now, BM8 have recently announced some updates. This is battery age minerals. So they have projects in Canada, Morocco, and Austria. Not Australia, Austria, Europe. Now, they have a rare semiconductor element called germanium. That is used, it's critical for the use of fiber optics, infrared sensors, think defense right there, AI data infrastructure, we all know that story, and it's now effectively embargoed by China, and they control 75% of the global supply. If you want to know more about rare earth elements and that whole issue and the whole movement from the 90s and how we are in the debacle that we are in today in the weaponization of supply chain, check out our video on rare earth elements. Nonetheless, Western demand is accelerating for all the reasons that we know with AI, defense, and so on. Supply is evaporating, particularly from China, so that means prices are spiking and strategic interest is rising fast, very quickly. This is where we flow on. So BM8 has an iron in many fires and many domiciled assets. Where we come to next with BM8 is that we move into the Defence Production Act. So this is where the weaponisation supply chain leads to the US government opening their wallet. We saw it with MP Minerals, and you see that in the rare earth elements videos, and we've seen it with lithiums in America. We'll touch on that in a second, a bit later in this video. So US domiciled assets are quite critical, and we've got some Nevada projects here. So we've got CC9. Now they benefit from the opening up of the wallet, particularly if they're close or nearby to other assets, and they can look to that expansion, the US government deploying capital, and those companies that have the influx of US dollars either acquiring assets nearby because they've got sort of the backing and the price floors that have come through with rare earth elements. We're a bit of hypothesization here, but that's showing up into the share prices. So that's CC9. We've got another one, which is RMX. So you'll see the massive share price jump up, the kick. This is on news, there's volume, episodic pivot, viable gap up. We see that positive news coming from US opening their wallet. It does transpire into Aussie companies with US domiciled assets. So then we also look north of the border. So Canada, it's a friendly, it's an allied, just like we are here in Australia, and Anthony Albanese looks like he's going over to talk to Donald Trump very soon. Who knows, could be talking about the supply of critical minerals in a similar way that we had with Joe Biden. Now, north in Canada, we've got CRR. Let me tick through to that chart. So CRR, you can see that movement as well. It's a lower capitalized company, but does lead to explosive prices and huge share price leverage effect. So critical resources limited. I really love a quote coming from Tim Wither here, their CEO. And this really helps describe where the market is right now. We are starting to see encouraging signals from small supply imbalances within the lithium markets. In preparation, we continue with low cost, value-adding work streams, building a strong foundation for long-term growth at Mavis Lakes. That's their project, but it antithesizes exactly what's going on here in the market and how that capital is being deployed and how the smaller companies are showing that huge leverage effect, going from 1/3 of a cent to 1.2 cents. That's a massive gain. Next in we go CC9. So let's toggle through to that chart. You're going to see here a bit of big volume, big movement, and then consolidation. This is the high tight flag that we talk about. So if you want to see these showing up, you're going to see this show up in the momentum, top 30 momentum, and then in the launch pad once again, and then huge volume with huge movement, possibly setting up a second high tight flag. If you want to learn more about those, check out our high tight flag video in the educational playlist. But this company does have lithium projects in the Nevada-Oregon border. Okay, we're US domiciled. This is the halo effect that we're talking about. They're in the right part of the world. And we're in the right part of the world with a big investor who's opening up their wallet and taking strategic places. So that's the US government. Then we move into RMX, the next one on the list. So RMX, bring up that chart, same thing. We've got some news, we've got some volume, and then we've got a big gap up, better news, better volume. This is really important. And this one is really fitting in with a close halo effect, also in proximity, very close proximity. Let's talk about their resources for a second. Mustang, that's located 9 kilometers from Belmont's Kibby Lake. Now 40 kilometer from America Lithium's, look up the news on that one because they got some money dropped into their back pocket. Their TLC project, I should say. Now Lithic is located 29 kilometers from Silver Peak, and that's the only operational US lithium mine. Plus they also have the Charlotte Lithium project in Australia. So a few irons in the fire, and some of them with solid halo effect, and that's showing up in the share price. So that's RMX. We quickly looked at Zenith before, ZMC, And that was the dual iron. So they've got gold. They've got two commodities driving the prices, pushing it higher. But we want to look at this other one as well to round out the top 6. Now, this is a much more tradable chart, I should say. Even though the share price is still low, what we're seeing is a good consistent. We've seen solid momentum, consistently showing up as a momentum leader in our lists. We have a solid run, sideways consolidation, staying above the 50-day moving average, which is the green line, and then pushing up with volume breakout. This is a nice, tradable, consistent chart with good setups, not so volatile. Seeing that with gold line, the average true range sort of dropping down in a well-behaved manner. Nonetheless, this is one of the leaders. They've located 4.5 kilometres from IGO, we'll get to them in a second, their South Iron Cap lithium discovery, and that's near Mount Holland. That's operating lithium mine by Covalent. The key thing here is that that's providing access to established mining infrastructure and services. What does that mean? As investors, we don't need to open up our wallets as much because part of the large expense of getting a commodity out to market, the global markets, is getting it from the central part of Australia or somewhere that's completely remote with no power, no rail and no roads. If you're located near an existing operating mine, then you can sort of piggyback off their power, their rail, their roads, and then ship it out to a port that's already got supply into the global markets. So that means that investors in these sort of companies can piggyback off it. It also opens up to a merger and acquisition side of things, because if these resources shore up and that company that's neighbouring is already operational with decent profits, good cash flow, they can either borrow or issue script and take over the company and then expand their project. It's the easiest way rather than going to the other side of the world and exploring an unknown project. So these become merger and acquisition targets. BHP is a great example of that over the last few decades. That's important, and that's where we look at that halo effect that we just saw before with some of the other US domiciled companies. Now we move into these larger cap companies, the ones that have been left behind. Remember that chart right at the top, PLS, IGO, Mineral Resources, Liontown. They're up about 6 to 9% for the week, and they're down for the year, most of them. But some of them are up 20 to 50% for the quarter. That's a reflection of the spot pricing coming out of the lows that we saw sort of earlier in the year. PLS is the first chart that we've got here, and you can see that sort of halfway. It's above the 200-day moving average now, the red line, but you're getting an idea. These are companies that we normally run to when we see the lithium price spike, but this is telling us the reasons that we've just covered, why we're moving into the smaller microcap part of the market. Here's another one, Mineral Resources, been trading this one. It does move quite well. Is above the 50-day moving average, the 200-day moving average, and is conforming. We've talked about that in some of the Friday videos if you want more of a breakdown. IGO, similar sort of story that you're seeing here. So they're not performing as well. One that's slightly more volatile and has had a massive run. If you look at it from the lows of 45 cents or so up to over $1, it's more than 100% rise in that 6-month period, but it's quite volatile. So we go from 75 cents and around $1. Very choppy, very exposed to that lithium market. These are some of the large ones. This is obviously not advice. You want advice, go to get a statement of advice from a personal advisor. But these are the top 6 companies on the ASX. We cover this in more detail in the thematics in the podcast. It is available to members. Once again, you can click down join and you'll get access to that, and also the web portal with all of the reports that help us filter through the companies that have the strongest relative strength in the market, that are within 2% of their quarterly highs, that have shown up on the launchpad X number of times in the last 30 days, are currently showing coils and compressions, and top ranked companies with the best performances. Also through to the momentum profile, which tells us how good are the momentum opportunities in the market right now. And here's a hint, it doesn't matter what the index is doing. Finally, there's signal strength. That tells us when to lean into the best momentum companies right now, or to look for new leaders that are emerging from the launchpad. These are just some of the tools that we share with members. Thank you very much for your support, and check out the other videos on the right-hand side.